We see a lot of caution by allocators and investors as we've all been evaluating the impact of rising interest rates over the last 12 months or so. And what we've seen is that deal flow in some asset classes has really slowed due to uncertainty of valuations and a wide bid-ask spread. And there's also, as you mentioned, the takeover of Silicon Valley Bank, which really was not on most people's radars, even as much as just as little as a week ago. And the broader impact on the banking sector that we expect, that's only going to exacerbate the situation, as investors are also going to need to grapple with availability of capital. And companies will need to grapple with that as well. So, but even before Silicon Valley Bank, we were really seeing some shift by allocators to take risk off, which I think has favored private credit and some real assets. If you look on private credit, which in many instances is floating rate, the gross returns on that asset class has benefited as interest rates have risen, as we talked about. But there is a counter to that. So managers and funds have used leverage, and so their cost of capital for those vehicles, and as I mentioned before, even potentially access to capital has put some pressure in that asset class. On the real asset side, we're seeing that in real estate and infrastructure, some sectors of those broad asset classes where you can pass along increases related to interest rates and inflation are definitely benefiting. And then lastly, if you think about private equity, there are companies which have greater pricing power, and there are some sectors that have better pricing power. And even in areas, despite the companies just having to deal with rising interest rates, that they will be able to provide good equity returns. So in general, as I think about deal flow, I think robust deal flow really requires stability in the market. And it feels like right now that overall deal flow will continue to be somewhat sluggish in the near term. And just given a bit of the new turmoil that we've been facing and looking at in the banking sector, it's not entirely clear when that resolves itself. So I would say, throughout 2023, we are looking potentially sluggish deal flow.